Okay, guys, this story was submitted by the doc from Silver Doctors. In 2011, as gold prices rocketed to $1,900 and oil was trading above $120 a barrel, there were few analysts who saw anything but further gains. But Marin Katusa of Katusa Research had a different opinion. At a majority commodity conference, Katusa, to boos and jeers from the audience, held strong to his analysis that an imminent deflationary collapse in commodity prices was on the horizon, and collapse they did. Yes, they did. According to Katusa, who is closely involved in the Canadian resource section, most people simply assumed that good times would go on forever. Good times never go on forever. Because it was very different at this time, but like any uninhibited party fueled by unlimited cash, the hangover was sure to follow. There's no doubt you had massive high-paying jobs in Canada that produces the benefit that benefited most in Alberta. In the last 12 months, they've had 70,000 layoffs, paying over $100,000 a year. Wow, 70,000 layoffs, paying over $100,000 a year. What is that? $70 million? Holy crap. When I go to these oil towns, you'd sit down at the casinos with them, and these guys were all about the hookers and blow. They were all about their toys, big fancy trucks, snowmobiles, and they were in the field for 2 weeks, and they make $20,000 and blow it all on the casinos. You knew it couldn't last. As Katusa notes in his latest interview with Future Money Trends, though the crash has been brutal for the sector, OPEC, can't survive on $20 oil. Yeah, they can survive on $20 oil. They can produce $20 oil, but they can't run their governments on $20 oil. That's why Saudi Arabia had to issue bonds for the first time in history to help pay for all their government programs. For 2 years, everyone's been saying OPEC's going to cut back. The reality here is that why would OPEC cut production? That would only prop up the Russians and the shale sector. And while most will argue that low oil prices will wipe out most American shale industry, Katusa had a contrarian view, suggesting that the shale oil sector, while significant, is not necessarily going to cause these companies to go under in the immediate future. Why? Because what banker in their right mind wants to get dirty and actually operate an oil field? So that would be funny. A bunch of bankers operating an oil field. So the debt will be amended, extended, and then probably they'll pretend. Because you can't just shut down an oil field. You have to reclaim those wells, which means you have to shut them down and environmentally reclaim them. And it costs more to do that than what the actual value is. The bankers know that. With innovation in the Western world, costs will decrease, and the bankers have no choice but to amend, extend, and pretend the debt. So they're going to go lower for longer. In short, going forward, we should expect widespread manipulation from the producers, and the banks themselves should keep the bankruptcies at bay. Yeah, because they're not reporting the bankruptcies. But recession still looms, and Katusa says that there are two things that we can count on in the near future and why people need to rethink their investments. The economy is changing in a zero interest rate policy where people have to rethink their investments. You're surely looking at higher volatility, lower returns, but much higher risk. With all this going on in the world, there are only two things that can happen. We continue with negative interest rates, which I see the trend globally. 35% of Eurozone countries have negative rates, interest policies, and there's going to be quantitative easing for the people. QE-4-P. And that's the reality here. Hey, at least we would get quantitative easing and not these freaking banks who got millions and billions and trillions of dollars to stay open. They could help us out a little bit. Jeez. I know it wouldn't be good for the world or for the economy, but hey, at least we get something out of the deal instead of getting screwed by the banks with negative interest rates. Negative interest rates are a tax on wealth, a tax on savers. Now, if you haven't already guessed, amid all the volatility and debasement of currencies, one asset class, including, according to Katusa, will survive and counter the coming helicopter drop of freshly printed dollars. There will be a great way to make money on this if you get ahead of QE-4P. The quantitative easing for the people amid and gold is just one of the ways to do that. This must-see interview, Katusa expands on the forecast by noting that on top of all the bailouts, trade tariffs, and quantitative easing to follow for the banks, China, in an effort to maintain the perception of stability in their economy and financial markets, we soon begin flooding the global economy with commodities like aluminum, steel, iron ore, and coal, which will continue to have deflationary impact on a broader commodity market. But the one sector that can't flood precious metals is the very sector investors should be looking for as a way not to only preserve wealth going forward, but to grow it exponentially. A crisis continues to hammer the global marketplace. That's why Kansas has disclosed, that's why Katusa has disclosed he is writing million-dollar checks to one specific gold acquisition company, similar fashion to other noteworthy insiders who are moving heavily into gold, including Doug Casey, Eric Sprott, George Soros, Stanley Druckenmiller, and Carl Icahn. I think that's that one that they're doing out of Canada. I'm not sure. Anyways, guys, I want you guys to comment to these stories because I'm going to be giving away some silver. Anybody who comments will be entered in to win some silver. I'm going to be giving away more than an ounce of silver, and I may do 3 separate giveaways where 3 people will win. I think that's kind of cool when more than one person can win. So subscribe, comment on these videos because that's the only way you can register to win the free silver. Take care, guys.